when Pete Rizzo asked me to do a webinar on successful crypto trading, there were two names that popped into my head immediately, and it was Dan and Bobby. For those of you guys don't know them, they're crypto OGs from legit crypto OGs. Like when I had my head in the sand about what's going on in this market, and how important it was going to become. These guys were grinding it away. They both also ran two of the best franchises in the OTC space. Bobby did Cumberland and Dan did Circle. And not only that, now they got into bigger and better things, and they're running their own business, and everything that I hear through the grapevine, they're killing it. So Dan, Bobby, thank you very much for joining us. Spending an hour and a half of your time doesn't go underappreciated, especially in these days when the market's swinging around. I know that the stuff that you guys kind of traffic in is moving. So we appreciate you guys joining. And to kind of back that up, we got a record number of sign-ins for this thing. Over 5,000 people wanted to come hear you guys speak. It's probably the only thing I got right in 2020, figuring out, people wanted to hear you guys talk. So hopefully I do a good job of of getting through it and ask you guys some pretty decent questions. That said, I want to spend another 30 seconds just going over what I think the agenda should look like. I like to do a little short intro with you guys, just a little bit of your backgrounds for people that don't know you. Talk a little bit about what you guys are doing at CMS Holdings. Then we can then we can go to the what it's like to trade crypto successfully. Then talk about current things that are happening, current trends. Like I know there's a lot of vol selling, some structured products, things going on. Then talk about DeFi, and that you could pretty much put DeFi in current trends. But when I was talking to Dan earlier, he made it quite aware to me. This is where billions of stuff is trading and is moving around a lot. And speaking like a true trader, that's where you want to be involved. And then lastly, if we could talk a little bit about where you think the future is, if we got any time, it'll be fun to talk about that. And maybe, even maybe some predictions, maybe so we can all look foolish, maybe 6 months to a year from now if we try to do this again. So thanks again for coming.
Appreciate it.
Thanks for having us.
Yeah.
Either one of you, Bobby, Dan, if you can talk a little bit about your backgrounds in crypto and what you're doing at CMS Holdings now.
You want to
go first, Bobby? I'll take a second.
All right. So yeah, appreciate you guys having us. So I was telling Nelson earlier on the call. Basically, I started my career at a company called Second Market right out of school, and then Second Market ultimately became DCG and Genesis Trading. And so at Second Market, I traded fixed income, always illiquid fixed income and securities. And then obviously the CEO Barry Silbert got very, very interested personally in Bitcoin, and he came over to the trading desk and he said, I'm going to start looking at this market, mainly because there wasn't one at the time. And that's really when I had met Dan, was trying to figure out, who all the players were in the space. And again, this was like 2012, 2013, when you were on bulletin boards, you were trying to find people, you were going down to Satoshi Square and Union Square. You were just trying to find out, what this market looked like. And then from there, I went to an exchange called ItBit. They were based in Singapore. They wanted to move to the US, and I thought they were doing things the right way. And that ended up morphing into Paxos and becoming a trust company. I went back to the trading side after that at DRW and helping to build out Cumberland. And then spent about 3 years there. And then, we decided to start CMS shortly after that. So in about 3 weeks, it will be CMS's 1 year anniversary.
Wow, time flies.
It does. It does, especially in 2020. I feel like time has been
Yeah, it's been a year, but it's like mentally and physically been like a decade. Yeah. It's great. It's been like a good run out of the gate. So my origin story is it's actually fairly similar. Definitely timeline wise. I remember me and Bobby traded when I was at Bay Hill, which was the hedge fund I was at before I got into crypto. So Bay Hill was volatility arbitrage was like their bread and butter. We were mostly trading like S&P 500 equity name vol, and then got into crypto late 2012. It was very small, personal capacity. Started to pitch it internally to the fund as like something we got involved in. It was kind of a compliance nightmare, and it kind of became impossible. So we ran it siloed in sort of like, we had like this other thing called Fort Hill, which was like basically partner money, what we were like doing. But still, it was like
custody issue more than anything else, right?
So the custody was like part of it. Even the bigger issue was like the legality of it was like super in question. So like until FinCEN came out and like said something, it just lived in this gray zone, right? Like everybody was like, is this even legal? Like, is it possibly, like nobody took the tack that it was necessarily illegal. It just wasn't explicitly okay. So like our CFO and compliance, like at the fund at the time was just like, this has got a ton of like hair on it. And like, also how much money do you possibly think you're going to make? And it was tough because at the time, like Bobby said, it wasn't like a market, right? Like there was very little notional trading every day. And it was like a couple overseas venues. Gox was basically the game in town. Like Bitstamp had like just like sort of carved out a little bit of that liquidity. Kraken hadn't even launched yet. And anyway, so like it just like wasn't gonna happen. So like in a personal capacity, I got very involved in like sort of electronic trading and then like sort of investing in the asset class. And then eventually took the leap and went to join Kraken, where I got this great shirt and was there for about 6 or 7 months. And then Jeremy and Sean raised money for Circle in Boston. I was living in Boston at the time. Didn't really like working remote, sort of wasn't feeling that, like wanted the vibe of like being with a team and everything in person. So jumped on with Circle, was there for close to 5 years and then teamed up with Bobby. But seen a lot of market cycles over the time of that. Always been in the like market facing side of the operations, like really always been involved in like the liquid products. Yeah, so it's been a weird evolution to sort of live through, but a good one.
And what is it now that you guys are doing at CMS Holding exactly?
So I guess I can go into the background of CMS and then understand like what we, I guess, exactly do there. So you could effectively look at CMS as kind of like a hedge fund in the space. The only difference is that we don't manage any outside capital. So it's just partner capital we manage here. We're about a team, about 9 folks now, split across a few different offices. But basically we do 2 main things. One thing is we make investments. So we make investments in, companies, projects, protocols, tokens at a very early stage. And then on the other side of the business, we have our, active trading strategies, which Dan manages.
Right.
And like both kind of play off of one another because as you can imagine, especially with where funding is today with a lot of projects, a lot of them are tokenized, meaning that like a lot of projects aren't raising in equity and things like that. And so what tends to happen is those investments turn liquid or they vest, and then they ultimately end up in the risk of our active strategies. And we kind of figure out what to do then. And it also is helpful for the projects because especially for where we've been focused on in like the decentralized exchange space and just kind of financial infrastructure space, it's like we start off as an investor, we provide capital, we then help kind of build product and give the folks our perspective of how we think products should look for a trader or a user. And then lo and behold, downstream, we ultimately end up becoming a customer, whether it's trading on the platform or utilizing whatever services that they provide.
Right. Oh, that's great. And like I said, we're through the grapevine, I hear you guys are doing great. So congrats on that. One of the things that, we asked for questions beforehand when people heard that you guys were coming on. One of the questions that first came up, and it came up several times, is how do you guys feel traditional markets? How is crypto trading different than traditional market trading? There are a bunch of idiosyncrasies within crypto that we can talk about, but there's definitely some things that I'm sure that you guys can point out that can help traders out there navigate.
Yeah. So the biggest difference is like you have to deal with your own custody and settlement, and you have to like deal with physical in the sense, right? Like, I mean, you say physical loosely, but like you're moving the assets around. Like if you go and trade stocks, right? Like you just click a bunch of buttons and like everything is like obfuscated from you, right? Like the settlement and clearing happens. You don't think about it. The margining is all super like easy and like in front of you. Like you have to manage every aspect of that if you're trading crypto, which is tedious, and like you're responsible for like sort of custodying a lot of your own assets at any given time, or at least knowing where you're going to keep them and like sort of managing the actual physical swapping and movement of all that. The second biggest thing is like crypto is bad in the sense that the capitalization usage is terrible because you're funding everything everywhere because there's no ability to like, all right, well, I have funds on Bitstamp, but I want to go trade like a swap product that's like launched on, I don't know, Kraken, right? Like you can't do that. There's no mechanism for like, there's no brokerage that sits in the middle that's extending you credit across all the venues. So instead you're capitalizing every different account that you have in every place, and you have to manage it, right? Especially if you're trading derivatives, you constantly have to be managing sort of your liquidation on like all of the different like venues. And like the biggest thing I think on that side with like the derivatives project is you don't, when you get a margin call with your like broker, right? Like you get a call or like they email you, you like get a notification, and then you get a chance to like pony up collateral, and like in crypto they just blow you out, and like there's like no recourse, right? They're just like, all right, you're done, boom, you're out. Like so you gotta like know that like you go to sleep, you're not like nobody's gonna give you any like time to like fix these things over. Like you're just gonna get ran over through the whole thing. So you gotta like really defend and manage it. Also, a lot of the crypto is collateralized on the derivative side with crypto, which is just a crazy negative like risk profile that you have on the way down. I think people forget that. So I don't know, those are the big things you like really have to pay attention before you even like think about like trading strategies or like how I'm going to approach risk. Just like the actual mechanics of like how am I going to like move funds, trade, settle, manage positions. Like that's like, it's just something most traders never deal with in other asset classes.
And I think like that pretty much like what overlays all of that is just like fragmentation in the market, right? So like whether that's like pricing fragmentation, data fragmentation, or service provider fragmentation. And what that basically means is like, you know, Dan and I were on a call a few weeks back with, you know, some traditional folks, and, you know, we're talking about certain coins, and they're like, okay, well, what's a ticker that you put on Bloomberg? And we're like, well, you're not going to find this on Bloomberg, unfortunately. But having said that, it's like even some of the data providers out there, like some of the websites you can go to, they don't all house or warehouse the same coins to look at data as their competitors. And so, you know, I constantly find myself balancing between different sites and trying to figure out, you know, where the best source of information is. And then, you know, obviously liquidity is fragmented. All the exchanges don't offer the same types of coins. So you really got to do your homework up front, because what tends to happen once you dive into this market is like you start building out. And then if you don't know exactly your strategy, then you're building out to all these different venues that have all the different types of connections. And it becomes a big mess at the end of the day.
Yeah, managing that is an OTC desk particular.
Yeah, you know firsthand, right? Like,
it's a lot of work. That being said, I mean, that fragmentation also gives us opportunity. Like if you're willing to do if you're willing to do the legwork and do your homework, as you said, you can find some good opportunities out there, which is great, and which makes the market interesting.
Yeah, the market will pay you to be sort of making those more efficient. It's just the terrible balance sheet usage. At least I find this in Circle on like the OTC side. Like you just needed a tremendous amount of capital to like keep all of the like balances you needed everywhere to be able to act. It was like very intense on that side.
Yeah. Are there any indicators that you guys look at in these markets that kind of, you know, when you wake up, you say, okay, this is what's happening. Like if you're a bond trader, you're looking at the 10-year yield, and, you know, you're looking at forwards and seeing where things are pricing. But are any indicators that you guys are looking at when trading these things?
Well, like I guess as like a yardstick, Bitcoin is like always like, all right, what is like aggregate interest in crypto, and like what is Bitcoin price doing? That's like sort of at the end of the day. But like even more importantly on that, it's like, what is the quarterly futures contract premium or discount to spot at any given point in time? Like, so if I wake up and I'm like, is like there, like what's the net interest look like? It's like, all right, well, has that spread widened or closed? Like, or is it like gone backwardated? Because then like you got like a real problem. But that tends to be our level of like general interest, and specifically like the amount of like long short imbalance in the derivative products. And like that tends to drive like short-term price a lot that we find.
Right.
And like on the like if you think about like the market itself, right? Like over the past few years, like has the market matured? Absolutely. But has like the profile of the person trading in the market changed that much? You know, I'd say it's changing, but ultimately it's still like, you know, a heavily retail focused asset class. And so when you start thinking about that, you're like, okay, well, what other mechanisms do you look for signals? And part of it I think are social metrics as well. Whether it's, you know, different social media types of platforms that you look for different signals. that can provide, a layer of information that, in most markets you probably wouldn't get. Well, maybe the stock market today, right? Given how many retail people are flooding that market, but that's also something we look at.
A good question that just came in. What is the most profitable element of your crypto analysis? What is, I guess to paraphrase, like what if you're looking at a project or looking at a trade, what has been the most profitable thing that kind of led you that, like, I need to have that before actually getting involved in this trade?
Yeah, I would say this is gonna be a two-part answer. So like in terms of where you're gonna make the most like percentage return, it's in like identifying smaller cap assets that like have some legs to them. Like, I mean, that's where you're gonna hit like the multiples, but like that's not something you're gonna devote a ton of balance sheet usage to. I think I still go back to like knowing where the curvature is going, or like where it's on extremes is going to like lead you to the most like consistent profitable trading activity for like large notional, because you could put 100 sticks on that and like you can still play the game.
Right. And how about valuation metrics? I know people, for instance, in Bitcoin, people talk about the stock to flow model has been hot. The Trace Mayer multiple, which is pretty much the 200-day moving average. Do you guys look at any of those things and kind of do it? Like the stock to flow model, I'm amazed at how much it picked up, and I never heard about it. And you guys been, in crypto way before me, so maybe you did. But the first time I heard about stock to flow in relationship to crypto was with Bitcoin, and it was Safety when he wrote his book. I think Trace mentioned it one time way at the beginning, but it never stuck. So for me for that to have an impact, people have to know it exists and using it for a comparison. Yeah. So and I understand that the correlations is high and all that other stuff, but are there metrics that you guys look at all?
I think like a real simple one, and like metrics are becoming a lot more prevalent in the market because a lot of stuff is now happening on chain, right? When you talk about DEXs or things like that, so value locked or TVL, right? Like people look at that, especially in DeFi, and we look at that mainly because where are the flows basically ultimately going?
Yeah, right? What are those two things that you mentioned?
So there's like websites out there like DeFiPulse.com that you can actually see how much like ETH is in any of these smart contracts and how much collateral is in any of these projects or protocols. It's like that's super interesting to us because that signals real usage, right? Whereas like, it's really hard to get that type of granular information out there on other types of stuff. But because more and more things are happening on chain, it's becoming super transparent to us. And so as you see flows going into, certain lending platforms and things like that, then you can start to compare the value against competing coins, but also, the projects themselves. And so I think that's a good simple metrics that we look at. Right. And at least I look at kind of every single day.
I think part of the problem you run into with stuff with like stock to flow, right, especially with Bitcoin, is if you just took like any random 6-month or like 3-month period in like Bitcoin's history, it's pretty much gone up, right? Especially if you like back test it like further than like 2017, so I think this is like ultimately the problem is like a lot of these metrics like probably look like they like make sense, but in general, it's hard attaching any specific thing because it has just appreciated as an asset class, like in aggregate. So like, that's like generally like where we sort of have issues with like any like longer dated signaling. I find to be noise because you're inferring something that's just inflated in valuation like over like times. But I will say what's interesting is I think it's good to know like what the net amount of like sort of cash inflow to offset new issuance is, especially across like multiple trades. Like I think that's super valuable and interesting, especially like knowing like, all right, like what are the fees like that are subsidizing it versus like what the block is, like that stuff is like useful to know like the health of the ecosystem. Right, because like ultimately, like that issuance has to get absorbed either by miners doing it via electricity costs or like end people that are like buying it from them. Like either way, somebody's paying that amount of money every day. Like that flow matters.
Oh, that is a good indicator. That's very true. And how about switching topics a little bit? How about the current trends on like we're seeing a lot of people trying to get involved in basis trades, a lot of vol selling, a lot of guys with bags saying, you know what, I got this asset, it doesn't give me a dividend, it doesn't give me a coupon payment, but so how do I get some yield out of it? And so I've heard a lot of vol, and obviously option trading has increased a lot. what trends you guys seeing there in the derivative market?
Yeah, so we're seeing. So we brought a head in just to specifically trade vol because like it's becoming bigger. So I don't know how big it's going to get with just Deribit. We'll see. I mean, like that's the venue right now. Like that's where like most of it's going. You're seeing like exchanges in Asia start to like try to like capture some of that. Specifically, like Matrixport like is now got their options thing. Anyway, I mean, like we're along the idea that like the options market is going to be like much bigger. Like it should be considering the size of the asset class. But back to your point, like we see a lot of structured product selling, specifically like call selling out of Asia, in particular, like targeting to people that like have large holdings or like miners that are like looking to like get yield on like sort of coin they're going to pull out of the ground anyway. I mean, these like things tend to be like this, right? Like they work great until they don't work a ton at once, you know? And like, I think what you're going to find is a lot of people don't entirely understand that risk profile until the event like shook them, right? Like here's the thing, Bitcoin like it's been volatile for like a normal asset size up, but it hasn't been like incredibly volatile like over, I want to say like the last year or so. So I think like when's the last time like Bitcoin doubled in like a very short time frame? I'm talking like a week. Like it's been a very long time. And like maybe like we've shook that, right? Like maybe like it's just grown up as an asset class. But like I don't know. I'm not like convinced that like that's like entirely sort of out of its like system still, especially like given where it sits in like geopolitical sort of stuff. So anyway, like just back to the point is I think that'll be fine. I just think that there'll be like people that don't entirely understand what they've done, like when like the thing all stakes and stuff. I mean, Deribit survived the March crash and like everything was fine and like the world like moved on. They had to top up the insurance fund a little bit, but that was a pretty good stress test on the way down. We just haven't had like a really good stress test, I think, on the way up, especially because the moves up have been like grinds up. They haven't been like straight candles. Like you had like that candle with President Xi or whatever in, what was that, November of last year? That was like the last like big gap move up that I like really remember like happening.
Yeah.
And like compared to like years prior, you have ways that you can express like a short view on the market, right? And so because of that, like it like dampens, you know, the volatility, which yeah, in the early days the price would double, or you could really see some multiples on kind of what the price of Bitcoin on the way up at least.
I've heard you guys talk a little bit about this before, and you know it's a topic that comes up. I'm seeing some of these questions come in. Tether, you know, there's been, you know, everybody loves to hate Tether, and it keeps on going up, and you know it keeps on ticking, right? And you know, have your views changed on that? I mean, is it, you know, at one point the DOJ came after it. What are you guys thinking about that? I mean, it's obviously useful. Somebody's using it.
Yeah. So like, I mean, we were very active in Tether in 16 and 17. We'd always like used it and interfaced it. Like we were big users of Bitfinex back in the day at Circle. I mean, like we probably issued a little over $1 billion in Tether during like the run up, and then we probably redeemed half of that, like sort of on the way back. Like we didn't have that on the balance sheet, right? This was just like the natural way that like flows happen. I put zero stock into the idea that like Tether has manipulated the price of Bitcoin. Like I just find it to be completely ridiculous. And I find it completely ridiculous for one reason, right? If you look at the run up in 17, the price on Bitfinex lagged the price on Coinbase, right? So like the whole reason Tether issuance got jacked is because people were trying to issue Tether to buy Bitcoin on Bitfinex, to whip it over to Coinbase to sell it. Like the Coinbase retail frenzy is what was driving the price and ultimately driving like the issuance in Tether. The problem is like people just see two charts that go up and they immediately just like started like trying to like correlate things like the wrong way, right? Like, and here's the thing. If USDC or like Coinbase's like internal balance sheet were like viewable at that same time, I bet you would have seen billions and billions and billions of dollars getting issued and sent there too. They just weren't. You just happen to have like invisibility in real time to what Bitfinex's balance sheet was in dollars. And like that just spooks everybody. I mean, like, here's the thing. People just don't want to believe that there was tens of billions of dollars of like net cash inflow, right? Like people just like don't want to believe that. They want to think like it's all a hoax, but it's not. Like I was sitting there punching tickets, like that happened.
And you know, there's been a lot of talk about structured trades. You know, do you see that business growing a lot, and where are the opportunities there?
It'll probably grow. I mean, it'll probably grow just because like that is like a natural like evolution of markets. I think it'll get really big if you do ever really see institutional participation in the asset class. because they're the kind of people that have like real access to credit that can like trade these things. Right? This is the problem, right? It's like, it's very hard to offer these things like bilaterally, or even like to anybody who's like more on the retail fringe. Like so much of crypto is just retail. There's like 5 institutions that are playing, right? And like they're trying to just do it very simple and like stick with just like Bitcoin Cash or like Bitcoin CME futures. Or like maybe they play out a little bit on the risk curve and trade on some of like the Asian derivative exchanges. But like the class of people you ultimately want to be selling those products to is just like not a participant yet. Yeah. But I think it'll get there, and then I think you'll like get those like products going to there. Because what you don't want is, you don't want to be selling this to a bunch of people that have like lackluster credit or have been lying on their like sort of like statements of like what their like actual balance sheet is. You don't find out till later. So I don't know.
Yeah, I think like the rise of whatever institutional demand or institutional participation that Dan's basically mentioning, like that will also coincide with the rise of kind of structured products and more like structured opportunities for those types of folks, right? And I think that the big bellwether there is like, if you end up getting one of the big banks involved, I mean, that's what they do, right? They create products for their customers that are going to help their needs at the end of the day. I think like Dan mentioned today, it's really hard because of the credit risk. And so who would you go to that you think is going to be around for a number of years that will structure something for you and be reliable? I mean, ultimately, that's why a lot of people go to the big banks to do some of that stuff in the financial world.
Do you guys you guys got any sense when these guys are going to come? I mean, you guys been involved in this so long. I can imagine sitting here since 2010, 11, 12, and thinking institutions are going to come. Like you can hear the footsteps. And here we are, 2020, and you're still talking about just 5 institutions being involved. And even then, you know, you get guys like Paul Tudor Jones that I think, like, when those guys get involved, they don't come alone, right? They they're not, as much as they are, you know, savants of markets. I think more so they just know where the trends are, and they get all their buddies piling in, and then, you know, and consequently the market goes their way. So, you know, for guys that have been around, are you guys surprised at why institutions haven't gotten in just yet? And if so, when do you think it does happen?
I don't know. Like, people have been talking about institutions coming since like the Winklevi filed that first ETF. I remember that. I remember they filed that and they were like, "It's here." We're like, and I was like, that was 2013, and like, you know, it's 7 years. It's a real hurdle to get over internal compliance. And like, I don't see that materially changing fast. So here's the thing. Like, there's 2 ways that this thing gets forced to the surface, right? Like, either like the burden to like actually get it through internally as like an asset that can be like traded or owned comes down, or the opportunity set materially grows, right? Because like at some point you're like, look, we can't miss out on this. Like, you find a way to do it. I said this about Jump when they like made that announcement that they were like doing the DeFi thing. I was like, somebody went to compliance and they were like, we're gonna do this. Like, I don't care what you said. Cause like that, like I can think of a million reasons that they could have buried that thing and like caused good reason not to. But somebody was like, no, there's an opportunity here. It came from the top, and they like pushed it through. Now, like the problem I think Bitcoin's got going for it in a sense is like, it's kind of just flat over the last 2 years, right? Like it kind of is like a very easy thing to like shoot down from like that asset side of the, like, but until you, so here's the thing. I don't want to say this like I know effect, but like in my mind, if I'm like, look, if I want to see this thing like actually like flip and turn, you start approaching all-time highs again, and like suddenly you got everybody being like, we got to be involved in this thing. It's like flowing through again. I think that is like sort of like how you get the push on like the interest side of the thing. And like, look, there, frankly, like the compliance burden is like lowering every day. Like there's good people doing good work to like make this thing accessible. You have CME products. Have backed if you like need like a custodian. Like it hasn't had a ton of like uptick, but like it's there as an option. Like you can do it now. There's not a lot of good excuses to be like, oh, we can't possibly trade this thing. Like it's a doable thing. And like, look, CME's open interest is like every month going up. Like their volumes are going like higher. Like it's getting there.
Yeah, I think like Dan and I and folks in turn, we have conversations with some of these institutions like on a weekly basis just to keep them up to date on the market. Like you mentioned Paul Tudor Jones and kind of the other funds that are out there. I mean, I have to imagine that every single fund has had this conversation internally. It's either come down to what Dan mentioned, compliance, or frankly, like maybe the market just isn't big enough, right? Is it worth the time, especially given like what's happening in the macro markets? And so I think I don't think they care about a 10% move up, right? Because, okay, fine, let's say they miss that, then they'll jump in at that point. I just don't think that really moves a needle for these guys to justify kind of the risk reward internally. But I think it's definitely taking longer than I think people have anticipated. I still don't think the tools are all there yet for them. But you still see numbers growing, especially on like the grayscale products. I think that's a very interesting indicator, because ultimately the people who are going into those products want to be holding securities at the end of the day that are, you know, tradable, that can go on a statement and things like that. So I think that's a pretty strong indicator of kind of the interest from the institutional side.
Yeah, the grayscale thing's big.
Yeah. And then the Fidelity's coming out with their thing. I don't know when, but obviously they announced that they're launching a fund. I mean, the folks that were early on was like ARK Invest when they kind of launched their fund. I mean, like this, like the institutional product base is kind of broadening, not just in like holding coins.
Yeah. And that brings up another good indicator is like the GBTC Premium. I always thought that, you know, you can see when retailers come in pretty big when you see that premium kind of blow out. Sort of like the basis and the perp versus the spot basis that Dan was talking about earlier. One of the things, and we're going over the halfway mark, and I promised the guys that I would try to keep it to an hour, although I could probably talk to you guys for days. One of the things that we know that you guys are big in is in the DeFi space and experts in right at the heart of it. And we've seen all the volatility, and, you know, traders love volatility. We're all volatility junkies when it all comes down to it. Can you guys talk about what's going on in that space? I'm embarrassingly, just kept one eye on it, and now I feel bad because I should be all over this stuff, and I'm trying my best to try to keep up. So I'm gonna learn as much as the community about this from this conversation. What's going on in this space, and what are you guys looking at?
So I think first off, I'm gonna like taper expectations. I don't think like we're expert. Here's the thing: I don't think anybody actually has like a firm grasp of like all of this. Like it's just impossible. It's just moving so fast. So that being said, like we try to be as active in it as we can. I mean, look, like that's like kind of where the action is right now. Like that's the stuff that's like moving around really fast. Like there's huge notionals like punching behind a lot of this stuff. It's like very fast. Like if you can like figure it out, there's like a really good opportunity to make money. I think personally, it all got like out of control and like really into this like mania that it's been in when Compound launched their token. And like the market just went ape shit over like this idea that like you earn the token. Like it's like it's not Transmine, but like it's like a lot like that where like using the product gives you back like some portion of the governance. And then you've seen like a lot of iterations of that like post sort of like come into the market. And it's also just pushed people into using these products, right? So it like hooked all of this value in from like larger crypto. And a lot of it is just stayed. I would actually say like all of it is like kind of stayed for now because it's like it's still just such like a good risk reward trade for like a lot of folk. So like there's things that are happening that are like material, I think, steps in the right direction for like products that offer traditional yield and lending type things that you can get in the market, but like fully on chain. Most of it is like copies of things that exist like in the traditional world. Like there's some like iterations on it, but like most stuff, I've been hard pressed to find anything that I couldn't find a corollary for in the real world. It's just now you can do the whole thing permissionless inside DeFi, and you can do it with your crypto. So this is the other thing is like crypto is like kind of a bad asset if you ever have to interface like the traditional world in any capacity, especially on a borrow and lending side. Like if you have $5 million of Bitcoin, there's like two places in the world you can go to get a loan for that. It's Genesis and it's BlockFi, and you're going to be paying 7 to 8% on that cash. Like it's weird, right? Like you're liquid in a asset class, right? Like, and you can't even get a loan at half the value of it from like a traditional sort of spot. So this is pushed a lot of people, I think, into like credit alternatives that like exist in DeFi. And because of that, like yields are very high on like lending out stuff as well, specifically cash. It's like cash flows in, like stable coins like flow in. So like that like just keeps like cycling sort of all in there. Do I think like everything that's there now is gonna like work and be the future and like stick around? Like absolutely not. Like there's too many permutations, there's too many iterations. It's like unclear like what is like really there. Also, the economics of everything are stretched in weird directions because like the transaction mine tokens subsidize a lot of the activity that's like going on. So like people are doing activity in DeFi that's like at a net loss only because they get subsidized by the token that they receive for it. So like that like warps with like sort of all the stuff. But anyway, like I think when the dust settles on it all, there is going to be like very large businesses, and business is not even the word, I don't even know what you call it, but like these ecosystems that exist that are going to be facilitating this like activity that is net beneficial to like all of crypto going forward. Like it's definitely not going to go away. I mean, even like Maker has been around for like a long time and been like very successful and has billions in it. Like this is going to be a big leap from that. It's just, I don't know what the final version of it looks like, but the market's trying to figure that out every day. And in doing so, like these tokens in particular, like the governance ones, like move massively in value. So I don't know, that's like from the trader side of it, like how we like view it all. But that being said, like we're struggling to keep on top of it. It's like very hard, especially because that stuff's like
from a fire hose, you know,
it's too much. And like now everything's like cross chain and like stuff's on Polkadot and like stuff's on like Cosmos. And it's like, so now not only do I have to care about like ETH related DeFi, I got to care about this Atoms related DeFi and like how it ties back in. Like it's just, you have to really broaden the number of assets like you're paying attention to.
How do you filter through all that? Like how do you go, okay, are you looking at the guys developing the project? Are you looking for the story that's going to resonate in the market? Are you just waiting for the things to kind of come on board and saying, okay, these guys are involved, so maybe start doing it? Or maybe you're waiting for it to hit on exchange? How are you kind of deciphering all that? Like I go in there and there's so much information sitting at Kraken. You can get so much stuff coming at you. Like, you know, wow, this thing's popping. Well, this thing's going down. Which one do you concentrate on? Like, how do you kind of decipher that? Is it the teams? What?
I mean, like all those things that you mentioned, along with like flows into it and things like that. I mean, those are all internally to us. Those are all variables, right? And inputs that we add into, you know, how we weight the risk reward, right? Because these things, a lot of these, as Dan mentioned, like a lot of these things are copycats of one another. Some of these things are unaudited, right? So you have to weigh a lot of the pros and cons related to risking capital into any one of these projects or any of these protocols. It's a constant, not a struggle internally, but it's a constant back and forth of, well, where are we going to get the best bang for our buck? Where's the best risk reward profile? And sometimes you go into these things understanding the risks related to basically the smart contract blowing up or getting hacked. That's a risk that we take on every single day that probably most do that participate in this. But I think market structure wise over time, and you've seen this play out with exchanges over the years, it's like it will start to get better, more refined. There will become standards, whether it's auditing standards or you know, like listing standards, like all that stuff is going to start to get fleshed out, but it's just going to take a little bit of time. And unfortunately, there will still be folks out there that are going to try to trick people out there. And so it's just, you got to kind of do your own homework at that point.
And that leads right to a question. Sorry to interrupt, Dan, but that leads right into a question that we just saw pop up a couple of times: is how do you avoid the rug pull? But Dan, before you answer that, you can finish what you were going to say, or
yeah, no, I was going to say, like, trying to find out who the people are that are running it, and like basically, look, sometimes you get a signal, right? Like somebody else has done due diligence and like basically said to the market, like, we have faith in this, like we've audited it, we've like checked out the team. But a lot of times this stuff is moving so fast, like you don't sort of get that signaling. So like the unfortunate reality is, like, you sort of let the market dictate where you're paying attention a lot of times, right? So like you sort of crowdsource this wisdom of like, all right, all these people are paying attention to it and it's like moving, and like that's just sort of where we have to look. And then you backwards from there try to figure out like, all right, like what pieces of this are like, I'm trying to figure out. I think like the one that like really like got us on that side where we like, we were in it, but not in the capacity that we should have been, with this, like, I don't know how to say it, but like this Yearn Finance whole thing, the YFI token, like that thing is weird, right? Because it kind of just like,
you think?
it just, yeah, it's born out of nowhere. You don't really know who's operating it in the beginning, at least on the capacity. It seems like it's a meme when it like starts, and then you're like, come to find out that it's like actually this like super well thought out. But like you had to figure that out in like 3 days before the thing, like, I don't know, 20x or whatever, right? Like, but like that was like sort of like the process where like something where we at first saw it and we were like, all right, I don't know, I can't figure this out. I can't, like, but then the market started to react and we were like, we have to figure this out. Like, we can't afford not to.
And like, I don't know, that was one of the more interesting ones that like sort of went through the whole thing.
A net anecdotal on that one. We had a guy come in and buy some that we know, a friend of ours, and said, "Hey, can you help me pick some of this stuff up?" And we're like, I thought he was joking at first, and we eventually got him some, and we blink, and I thought, when I saw the number, I thought there was an extra zero on the thing. I'm like, what? I mean, are you kidding me? Like, there's somebody, this must be a mistake, right? Or is this priced in yen now all of a sudden? It was amazing to me how that thing popped, and
it's crazy.
Yeah, it's nuts. So, and how do you guys like divvying up your risk? Like, because you could fall in love with one of these projects and you think you need to put more money in it, more capital in it. And as you mentioned earlier, Dan, capital is a premium, right? Like everybody's looking for it. You get, because of the market and the way it's structured, it's not like you can go borrow stuff. So, understanding how you're going to divvy up your calls and your positions, I think is as important as anything in the business. And how do you guys do that, right? Because I could see myself say, well, I'm in love with this project, I think I'm going to put 30% of it in, and you're wrong, and then good night, right? So how are you guys doing that?
Yeah, so like we probably break it up 80-20 between like liquid and illiquid names. So we'll keep like 20% of the book like in illiquid positions, and then we'll like those can change because like illiquid positions can rise, and like you can't always like sort of balance it. So that like tends to be the breakout on that side. But in the liquid name side, it's generally we look at its beta to Bitcoin, and then we look at its vol, and we like size it accordingly, right? Like you can't like you're in finance, like yeah, it's great, and like it went up, and like you should have put the whole thing in it, but like it's probably like a 400 vol asset, or I don't know, it's probably really high, but like you get the point that it's like you can't be putting position sizing into things like that are so large that it's like dominating your P&L swings, like sort of on the day-to-day, or at least that's how we like approached it. So like really like we end up keeping the majority of our balance sheet positions in Bitcoin, ETH, exchange tokens, and then like we have the longer tail of like stuff that we trade, and that tends to be much like smaller like slugs. So I don't know, that's like how we tend to like think about it on risk terms when we do it. And like look, like the vol tends to just be like a function of its like price history too, right? Like the newer this stuff is, the more volatile it is.
Yeah, and I think like on the investment side, it's like we kind of segment out in time frames, right? If anything, this past year, like literally in the past 6 to 8 months, a lot of the deal terms have become much more favorable to the folks that are introducing these projects out there. Favorable in terms of valuations, favorable in terms of vesting periods and things like that. So look, I wish we had unlimited balance sheet at the end of the day, but ultimately we don't, right? And so you have to really think about things in terms of, at least for me on the investment side, it's like time frames. So how much capital is allocated across different quarters, years, and things like that. That becomes important because obviously we're doing a lot on the active trading stuff, and so we are constantly battling. Hey, what's the best bang for our buck at the end of the day? And so the good part is when some of those projects roll off, they get pushed into the risk of the active book, and we're able to kind of manage it there.
Do you guys have like you're up to 9 people now? Do you have individuals kind of watching certain positions and saying, okay, Ralph, you're in charge of this, you're in position, like you got to watch it and make sure everything that's going on is there, because like we talked earlier, there's so much information coming in and you can get distracted so easily. Like you can forget that you got this thing on and you got some money in it, and like you fall asleep on it.
Oh yeah, yeah. Well, so I mean, I guess the first thing is like we have a screen that just like shows everything, like sort of in real time. So like we try not to lose, but yeah, you're right. Like you can be like, I don't entirely understand what I've like really got on at any time, especially if you got like 20 like quarters or positions on. So generally the way it works is if somebody internally pitches a position and we put it on, like you own that, like that's on you. So like you have to pay attention to it, and like yeah, it'll get like sized accordingly to like how we like are moving risk like in real time, but like you best know what's happening with it like as like stuff is like progressing. So like that tends to be like the rule. Other than that though, like on the like stuff that we're like constantly trading, we like broke the universe up like early on, and like people like are responsible for like each sort of asset, and then like the big ones like Bitcoin and ETH, like everybody's paying attention to. It's like that tends to be the thing. So also the rug pull question that somebody asked, I didn't want to completely forget him. So like, I mean, how do you avoid it? Like, I mean, either you're
rug risk?
Yeah.
Oh,
I mean, like either you're a great Solidity engineer and you like audit it and you like try to figure out what the risk is, or you just size it down. Like anything where you think there's like a pretty material rug risk, you gotta like size it accordingly. And I think that's like the only way you like get around that, unless you can do that level of due diligence.
I love that term. You guys heard that term before? I mean, I was around for a while. I did Wall Street for a while, and I never. I mean, of course, you got runned over. You got burnt, this, that, and the other thing. But I never heard the term rug puller. So, is that a crypto term that came out of crypto?
I think so. I feel like we've only been saying it the last month.
Yeah, exactly. It's fantastic, thoh. It's
so
that's
good.
Exactly what it feels like when you got that position on and you wake up, all of a sudden it's down 80%.
There's a good Slack emoji for it too, so it's good.
Oh, is there?
Yeah.
Already? That's fantastic. I love that about crypto. We got, we got two terms, memes come out immediately. It's fantastic. One of the things that people talked about, coming up through here is, has COVID affected your operations at all? Is it going on in crypto? Like, it almost sounds like a silly question, but we get at least 3 people have asked on that. Like, what's going on? Like, is COVID affecting our markets at all?
Maybe we could talk about the company and then maybe talk about the market. I guess organizationally, it's I think Dan and I have been so conditioned and used to working in like a decentralized manner that it hasn't like really affected organization wise. I mean, we everybody's very comfortable working from home and working remotely and things like that. It really, I actually don't think it's really affected us too much on that front. On the trading side, it obviously provides opportunities, but at the same time, a lot of things have started to become correlated with one another, especially at the beginning of COVID, as you saw with the stock market, you saw with crypto. And so I think a lot of that stuff continues to exist out there.
Yeah, I mean, like it affects the market in the sense that like you're living through like kind of wild like macro and specifically like Federal Reserve policy. So like that you can't like Bitcoin and crypto can't be like devoid from that entirely. So like and look, it really mattered in March, right? Like that was like very obvious. But then even subsequently, I think like it's mattered, like Bitcoin's having reactionary moves to fiscal policy. So like I think like look, I mean, if they come out tomorrow and they're like we're doing a $5 trillion stimulus, like Bitcoin's up. Like there's just no world that's not like the case.
Right. One of the things I do, I give out books to friends, and I've gotten a lot of text back saying from my buddies, hey, I read this thing, man, very interesting. Because I think getting into crypto, you got that initial like, oh, that's fake internet money. That sounds ridiculous. Like, so you got to get people to kind of spend the time. I think having people spend more time at home and having time to read and looking for stuff to do while they're sitting at home, I think that's brought in a lot more awareness. So for COVID, I think that's helped. I can see it myself. Like I've given out these books and most of them have gone, to buddies and they put it on the shelf and they never read them. So now I've noticed a substantial uptick in the amount of people coming back and say, hey, thanks for that book. I actually went on and bought a couple of Bitcoin. So,
well, I mean, like you guys probably have great visibility into it on like the inflows and the signups on like Kraken itself, but like I have to think there's a lot of people with a lot of time on their hands with an inclination for gambling who can't do really anything else, and they're finding a way to like crypto and the stock market. Like that's definitely a thing. Yeah,
for sure. What do you guys, now that we're coming up on the final 10 minutes here, what do you guys think about the future of the space? I mean, we got DeFi obviously is off to an interesting start, to say the least. What do you guys think about the future of the space? Where are we going from here?
Yeah, at least like on the investment side and stuff. I mean, we like if we think about what the last 9 months or beginning of the year kind of look like, we put a lot of money into DeFi and decentralized exchanges and a lot of work there. We tend to be a shop that looks at major themes and basically where flows will ultimately end up going, right? And so I think we've been pretty much concentrating on a lot of cross-chain stuff because it's probably where a lot of the development's going to start moving towards. But at the same point, you're kind of living like, you say future and people have different timelines of future, right? I think our future is like Monday, right? Versus like maybe other people who have a much longer time horizon, but it's as the further out the curve you go, the more questionable things become. And so we tend to look at things in quicker sprints than probably most folks out there.
Yeah. I'll give 2 bullish ones and 2 bearish ones. So like, I think price action and net inflow is going to continue to remain high, and like asset prices will in general move up and to the right. So like, I think that's the trend. I think that continues. I think like there continues to be like fiscal sort of stimulus, like balance sheet expansion, markets in general up. And like, I think that's the trend. I think there'll be like nonsense in the election, but like, I don't even think it matters what party wins. I think like that just like continues. I think that's the new norm, at least for like the interim. So like, I think that's good. I think you're going to see additionally like a horizontal participation in the asset class in such that like Bitcoin will remain the bellwether, but like interest in like alternative sort of stuff continues to like grow. I think that's been the trend as well. It goes through waves, right? Like you have cycles of like Bitcoin dominance and then like sort of horizontal expansion of like assets that people are interested in. Like it goes up and down. I think we're just like in the middle of like one where it's like pulling up, but I do think like that'll net inflow pull Bitcoin up as well. On the bearish one, I think there's going to be like regulatory issues or at least conversations that start around the stablecoin space because it's getting so large. So like part of me is like, look, like there's a number where like the total assets or the total dollars issued on stablecoins hits that it becomes an actual like conversation that has to be happen at a congressional level. Like where that number is, I don't know, but like it's tacking on billions a month. It's going to get there. And it's just a lot of money. And I think it's not going to like go without like some questions and some conversations that have to happen. I have faith that it'll work out right in the end, but it'll probably it'll like spook some people in like the short term. So like that I think is going to be like a big thing that's going to like happen on that side. I also think that there's going to be like regulatory concerns coming around DeFi, mostly because a lot of these like tokens that are getting slapped onto everything have a quasi-equity looking thing to them. And I think there's going to be questions coming to all sorts of participants that are like involved in it. So like, I think those are the two things that like concern me about like it going forward. But like, I think here's the thing, like you have regulatory concerns in things that are getting a ton of money and popularity. So like, it's weird, right? Like, so the same things that are driving prices higher are the same things giving like pause to the people that are supposed to be policing it. So I think those things happen tangentially. And I think that's like sort of how it's going to play out.
Right. I had I've always, coming from the traditional space, getting all your licenses and stuff, and, you get the fear of God. Like, you don't want to get involved in stuff because that's regulatory and things like that. So I've always been extra concerned about the regulatory aspect. And recently I had lunch with Marco Santori, who runs the legal thing here. You guys might know him. And he had an interesting perspective on it. He says, because I kept on telling him, well, this is going to drop, this is going to drop. He says, it's not about dropping, it's a gradual thing. So this is not, all of a sudden, they're not going to come down and shut things down and do it. They're going to come in and they're going to bump up our regulation. And it's going to be a step-by-step process. He said he did the same thing happen, and he's been in the space just as long as you guys. And, he said, the same things that he thought about what were going to happen to Bitcoin early on, and it turned out that it was just like a step process that we kind of evolved, and the legal framework kind of revolves around the space. And it's not this big hammer that comes in and blows us all up. And I thought that was interesting because I've always expected the shoe to drop. All of a sudden, we're going to get, guys with handcuffs in their pockets knocking on our doors. So, but that was an interesting thing. And listening to him speak was pretty interesting as that.
Yeah, I tend to think that regulators don't want to cause a bunch of undue harm. Right. I think at the end of the day, like they're still regular people and they like want like things to sort of work out, but they like want the rules to be enforced. But like they don't want to come in and just like flatten all of crypto and like cause billions of dollars in losses to retail. Like it's not like what they're in the game of, and it's also like not enforcement of the rules. I think they just want to like make sure that like, things are being enforced to at least their interpretation of how things are currently. It's just weird because like none of this stuff ever really fits in the box perfectly. So I don't know. I mean, we've survived this regime coming in and like putting rules in place before. Like I think it'll be fine. It's just like I don't know. People get spooked.
Yeah. The Bitcoin, as we're getting here in the final few minutes, the Bitcoin price is always a topic. And, a lot of people don't like to talk about it because they been fooled before, and Bitcoin makes liars out of all of us. But if you guys are willing to take a chat, what do you guys think Bitcoin price is in 6 months and say the next halving? Let's take a guess. And maybe if we're lucky, maybe if I'm lucky enough to get you guys back, we could test it back then.
All right. I will go first. 6 months.
Yeah.
6 months. I will say 13,500. I feel like we're on the Price is Right now. 13,500.
Yo, what are the rules? Can I go 13,501?
All right.
I don't really see. There's just like, look, what I love Bitcoin to rally and rip to the levels that people have stated, end of year, we're going to see 40K or whatever. Like, look, like, yeah, I would love to see that. But at the same point, like, I understand that Bitcoin has faced this like very severe resistance at 12K. It's very hard to break that. It's just like, I just don't see it within 6 months. I think that's too short a time frame.
And how about the next halving?
Oh man.
You don't have to. I mean, I just put a weird trader. So
85.
we traded 85 grand.
18,500
By the next halving. Wow.
Yeah. I am.
That's very conservative. That's very conservative.
Yeah, that is conservative. I'm gonna go 14.5, 6, and then 25 on 4. I gotta think we break a new all-time high by the next halving. That's maybe I'm just a little more bullish.
Man, you guys. I mean, that's almost bearish in my view.
Can we flip it? Can we flip it? What are you able to state?
Well, I mean, we're not. This is not investment advice. This is just a guess from a fat guy sitting in a chair over here.
I want to write this down so that I know where it's going.
No. I think
Dan's about to tweet this, by the way.
Yeah, I think between Thanksgiving and Christmas, we're gonna get this thing jammed up, and I think we see over 15. And by next halving, I think this is a $50,000 asset. I just think that the amount of demand, the amount of news that's going out there, what's going on in the world, the amount of money printing that's going to have to be done after this COVID thing, I think it's going to be. I mean, people they throw $3 trillion out like it's nothing. Like this thing's three. It's
isn't it
12 zeros, man? It's got 4. Come on, 4 commas.
But it's wild. Do you remember when like the COVID stuff first started on the fiscal side and people were talking about like $1 trillion in stimulus? And everybody was like, "It's so much money!" Like it's extra. Yeah. And now they're fighting between like 2 and 4 or whatever it is. Like right now, I don't even know because I don't pay attention to politics of it. But like, it's like just people have just disregarded it. Like it doesn't matter anymore. It's like it's absurd. Like there's just so much. I don't know. I think it's wild. Maybe I just don't understand macroeconomics at all.
And when you see like countries coming out and be like, "Oh, we're gonna inject $200 billion into the economy," we're like, "Is that enough?" Like, enough.
Exactly. It's just, and everybody's.
It's almost like a contest of who can basically print more money, and it becomes like a media thing.
Exactly, and it's everybody, and it's just not the U.S. People focus on the U.S., but Europe's going to have to do the same thing. They're going to do the same thing in Asia. I mean, in Latin America, forget about it. It's like, they got the printing press. There's not enough ink in the world.
Normal routine, yeah.
Yeah. So, and now they have a great excuse. So to me, I think, and people, and I think there's a lot more stuff going on in Oxford economics and scarcity and all these things. I just, and maybe, compared to you guys, I'm a noob, and all I'm seeing, I'm blinking hearts when I look at Bitcoin, and maybe I'm deceived by it, but I just think that this is the asset. This is,
to be honest, like you guys probably have a much better view on that than we do, mainly because we don't really see, we're speculating and trying to do homework on where the flows are going to go, but ultimately you guys kind of have the front view seat of again the types of people that are in this market, which tend to be more retail and most likely trading on Kraken, right?
Yeah, I mean that price action is going to be directly driven by the cash inflows on like your exchange, and you're going to know immediately.
Yeah, for sure. Now we are up on the hour. I want to ask you one last question for both of you guys that I don't know how you did it and managed to be as successful as you are, and manage miss all the potholes that this market comes, because there's been a lot of places that have started up and we all know them and they're friends of ours, and they didn't have to do as well as you guys have done. So congratulations on that. So I want to glean one thing from you guys. If there's one thing that you can tell a trader out there that's trading crypto markets that has helped you navigate these things, what would it be? What would be most helpful?
So I think the single best piece of like advice like I've ever got, and this was weird. I got this like very early on. It was when I was at Bay Hill, and it was. I remember Bitcoin had like gone up a bunch, and like Alec, the PM, the guy who like started the whole thing, was like, I was like, I'm going to sell some, like I take it off. And he's like, why? He's like, you're taking it off just because it went up. He's like, that doesn't make any sense. He's like, you're just like reacting because like you have this like constant like fear that it's going to like mean revert. And I was like, yeah, I guess that sort of makes sense. But his like point at the end of the day was like what they say, like let your winners ride, or like concept. But like even more so if you're like running an active desk is like, if you're winning and you're like making money and like your thesis is working and you're like right, you should be pushing more into it, not away from it. And I think Soros had this big quote on this where like years where you're up, you should just swing more. You know, he's like, you get this like concept of like, you try to like protect what you've got when really you need to be like, that means you're acting in a market that's like very like, I don't know, frothy, like things are working out in the way that you thought they were. You have to push it then versus like scaling it back to try to like keep things conservative. So I think that's the biggest. That doesn't mean go out and like jack up your leverage though, because that's like the other problem that crypto has is like, do not get yourself in a position where you're going to be forced to do things because of like your leverage. Like I think that's like a problem that like a lot of people die by too. So like, that's not what I'm saying, but what I'm saying is like, keep enough in the game to make it material, like on the way up. Like don't like scale yourself immediately out. I don't know. That would be like the best advice I think you got to do in this asset class.
I like that in this sense also, because if you're putting more money on it, it makes you test your conviction and test your thesis, right? Like, do I really want to do this? Like, instead of just writing it, because sometimes when you're just writing a position, you fall asleep. It's doing well, you know, it's going higher. Oh man, I got this in the bag, dude. I made the right decisions. But when you're thinking about pressing it, I think it forces you to do a little bit more homework. So I think it's part of it there.
You know, I'll take it from like taking trading out of it just for anybody, I guess, like just career wise, trying to build a company, whatever it is. It's like, for me at least, it's like have 4 to 5 mentors who are not part of your industry or ecosystem. Right. Unbiased people who you know, aren't motivated by the same things that you are in your industry, that you can call up and they're your mentors and you can ask them anything and you get this feedback from an outsider. And I do that constantly because when you're looking at things, opportunities, whether it's career stuff, whatever it is, you want to be able to talk to someone that knows you, but isn't married or has emotions to kind of what you're doing.
All right, that's good advice, guys. You know, it's been a real pleasure for me to talk to you guys today, and I really appreciate the time that you guys spent with us. You know, like I said earlier, it's you know, we got a lot of signups for this thing, and it looks like we got a lot of people actually watching, and so it is a testament to you guys and the success you had and the reputations that you guys have built. So thank you very much for the time. Hopefully we can do it again. Maybe we could, you know, maybe you offer this opportunity to do it once again, because I think a lot of people are going to enjoy it and like listening to you guys. But thank you very much.
Thanks. Yeah, I'm coming back in 6 months to tell Bobby's a bear.
Thanks, guys.
Thanks, you guys.
Bye.